Hi everyone, so welcome back to my YouTube channel. Now I know that everything looks a little bit unconventional right now with everything that's been going on. I would usually be in a pretty room interviewing someone, but today I'm actually on Zoom recording this for you guys because I have got so many questions regarding mortgage brokers and whether it's a good time to buy a property right now. So today's video is in collaboration with the Nottingham, and I am actually joined by Ben, who is one of their senior managers. So I'm going to be having a Q&A with Ben, and I've got all of your questions that I got from Instagram recently, and we're just going to have a good conversation about buying a property, mortgages, and just get to the nitty-gritty of things. So Ben, I have got loads of questions for you, so I hope you're ready for all of these.
Yeah, I'm ready.
So I think the first question that I have to start with is whether 2020 is a good year to buy a property. I know everyone is either buying property, scared to buy property, nobody knows what to do. From your perspective, what would you recommend?
Well, yes, 2020 has been a bit of a crazy year, but there's some really good things that have happened for people that are out there in the mortgage market in 2020. Well, we've seen some really groundbreaking record low interest rates this year across the whole of the market, really, which is great for those people that are in the market this year.
Yeah.
And as well, behind all that is probably, you know, I've been in the mortgage market now for nearly 15 years, and I've not seen it as quite as competitive as it has been this year. There are so many lenders out there that are absolutely looking to grow their customer base and to lend to customers. So with that high level of competitiveness and record low interest rate, you could say 2020 is actually a good time to be in the mortgage market buying a house. And it's got even better recently as well. We've seen some really good announcements with regards to the stamp duty changes.
Oh my goodness!
Which opens up so many doors for so many customers now. You know, up to £500,000 now without stamp duty. You know, that's great. You know, we'll see that for the rest of the year as well. 2020 is going to be an important year for people that want to buy a house as well, because certain things are going to change in 2021. So, you know, we look forward and we see the Help to Buy rules changing next year, I think from the 1st of April. So that again could be, you know, a good prompt that people kind of need, or that little bit of encouragement to get into the market, despite what's happening out there, you know, across the world. You know, there are some really good reasons why now is a good time for people. And of course, if it's the right thing to do for you personally, then why wait? Why delay? Delay?
I completely agree. I mean, speaking from somebody who did have to pay stamp duty when I bought my flat, it's something that you just don't want to pay. So during this period, if you are a first-time buyer, I would definitely recommend making the most of this time.
I was going to say, with that money, customers, you know, it opens up options for them. They can use that money that they would have used for stamp duty to maybe, you know, upgrade a little bit on their property choice, or when they do buy and move in, they got some cash there to, you know, to invest in the property from, you know, from day one.
Not even just renovations, but maybe it could even open up your budget a little bit more, where you could probably afford a bit more. You just, you know, having that extra money that you've got saved, why not put it to something else rather than missing the stamp duty gap? So I agree. And off the back of that, as a first-time buyer then, being a first-time buyer, what would you need, say, when you're meeting with a mortgage broker to start with?
Yeah, it's a great question. As a first-time buyer, clearly you've never gone through the process before, so it can feel a little bit daunting. So I always say preparation is key, and it's not too onerous at all. It's simple stuff, but if you don't do it, it can be, you know, it can really hold you back. So speak early to a mortgage broker, I would say. Get some good initial advice, and they'll give you some good preparation tips. And they'll be along the lines of this, which is get your paperwork in order. So wage slips, you know, have a good 6 months worth of wage slips. If your income varies, you know, from month to month, then you might want to go further back, 9 months, 12 months, just to show that you've got a good, steady, consistent flow of income coming. Obviously, not everybody's employed, and so the requirements can be a little bit different if you're self-employed. Previous year's accounts, future year's forecasts, that sort of stuff. Yeah, they're really good. So that tackles half of the sort of problem, if you like, which is you demonstrating what income you've got. The other side is really what finances are going out the door every month, I guess, is the best way to look at it. and make sure you're prepared there. So for a good few months before you're looking to apply, try and tidy up any credit arrangements that you've got. If there's any credit cards or loans that you can clear, then it's really good to start clearing the decks, because the less credit you have elsewhere, the more that other lenders are willing to lend to you, the greater your affordability, that sort of thing. Knowing exactly what's on your credit file is really important too.
Don't want any
There's on that day. No, absolutely not. And particularly if you're going into this with somebody else, you've got to make sure that you sit down with each other and have some good, frank, honest conversations about your financial history, because the last thing you want to do is find out about it when you sat in a room or on the phone with a mortgage broker. We're quite good at handling those situations, but
I was going to say that happen often, because I would love to be on the wall.
Yeah, you don't really want to be in the room, but it can happen. But it all boils down to preparation. So there's lots of ways of getting access to your credit report, many of them free. So we always say, get access to that, download your credit profile, go through that, make sure all your history is accurate, make sure there's nothing on there that you don't recognize. And quite often, if there is, you can resolve it, but it typically takes a month or two to do. It's all about preparation and speaking to a broker as early as you can, really, is what I'd say.
Yeah, getting that advice. I agree. Preparation is key. And I always say as well, you want to kind of paint a pretty picture of yourself before you're going to get the process rolling. So if you have an idea that you want to buy a house in a year, use that coming year to create a nice picture of yourself financially. So how you're spending, how your income is, because those things do matter. And you just want to be in the best place. Like you said, you don't want to have any surprises when you're all geared up to start looking for a house.
And your lifestyle comes into it. If you have a look on your bank account, and if you've got some regular transactions going out there to places that you probably wouldn't be doing if you had a mortgage to pay. Then changing that lifestyle early, can get you in a really good position to when you apply for your mortgage. I'm not going to say what can turn up on people's bank accounts, but you'll know if you're there.
So I have another question for you. What if someone has poor credit and they have a good deposit and a good salary? How does it all work? I get asked this a lot in terms of, does one trump the other? Is it a balancing act? What is more important?
Yeah, absolutely. It ties in quite nicely to our discussion a moment ago about the credit profile. So let's say you've got your credit report, you know what's on there, and what you see makes you a little bit nervous. Then, absolutely, it's not the end of the road for you. What a lender will do, they want to understand your wider, fuller circumstances. They want to make a full assessment of your situation. And that's as much looking forward as looking back, and your credit report very much is a looking back tool. It's a balancing act. So there's certain things you can have that work in your favour to sort of tip the balance back a little bit if you're a little bit nervous. Size of your deposit is absolutely something that can work in your favour. And what I mean by that is when a lender is looking at your application, it's looked at by someone who we call an underwriter. When they look at that, really what they're doing is they're assessing risk. Okay, and they use lots of different lenses and they look at it from lots of different angles. And your credit rating is just one of those things. So you'll offset that with a higher deposit, because the higher your deposit, the less of a loan relative to the value of the property. Okay, so that's definitely good. They'll also look at your affordability. So if you're lending absolutely to the hilt, so the maximum you can afford on a monthly basis, then that will probably make it a little bit tighter. But if you're quite cautious, you can be quite sensible with your budgeting, and you're aiming for a property that you feel is comfortably within your affordability, then that will absolutely work in your favour as well.
So that's all nice and positive, Ben, but I feel like there are definitely scenarios where a lender can turn you down. Why would a lender actually turn people down?
You're absolutely right. Not every application is successful, and a lender will turn you down if after their assessment of your application versus their risk appetite doesn't quite meet. They'll decline your application. But there's things you can do to avoid that. First of all, is speak to a mortgage broker. There's nobody else better out there that knows the market understands a lender's particular needs better than a mortgage broker. Okay, so a mortgage broker should absolutely spend time to understand what's important to you and understand all your circumstances. And what they will do then is they will give you some great mortgage advice about what the best deal is available to you and how long you should take the deal for and all that sort of good stuff.
Yeah.
But what they'll also be doing is matching you with the most appropriate lender.
For you.
Absolutely. Because each lender is willing to lend based on different factors. Okay, and the lender will be sifting through their mind and through the search tools they have available, which one is most suited to your needs and which one is most likely to say yes.
Right.
Okay, so good, open, frank, honest conversations with your mortgage broker is the best thing to do.
Definitely.
If there's any information that you've not shared, you've not disclosed, or maybe you didn't feel was relevant, then it's usually those sort of things that can kind of trip you up later down the road. Because an underwriter or a lender will often reveal those details that you've not had a conversation with your mortgage broker about. But with all your cards laid on the table, all the details there, a good mortgage broker will match you to the right lender. Okay, and that will reduce significantly the reasons why a lender will say no.
Yeah.
But beyond that, there's still things that are out of your control. I mean, there's a property in this whole equation at the end of the day. And as much scrutiny as you may come under as an applicant, the property will come under probably even more scrutiny.
Oh my gosh, yes. Yeah.
Absolutely. The property at the end of the day is the lender's security. So they want to make sure that property, is a good, solid investment for you and for them. So it gives you peace of mind as a customer as well. And so the property itself, once a valuation has been conducted, that needs to be verified. And on occasion, an application can be declined because of the property itself.
Yeah, I had a situation leading up to buying my home where the property that I really wanted was valued 20k less. So that was really sad. I was crying about it, but in hindsight, I'm really glad it didn't happen because the property was nowhere near what I end up getting. But I think that is really good security in that, because the mortgage lender have, a lot to risk as well. They're going to make sure that you're actually getting the right property that is reliable, that is not going to fall down tomorrow. So it's quite a win-win, even though it can be quite strict. It also means that you're going to get the best possible, which is really good as well. So this is a good question, which I think some people kind of have different views on it. But on average, how much can somebody borrow depending on their salary?
Yeah, it's a good question, and it's usually the first question people ask.
How I earn?
Yeah, how much can I borrow? What can I go out and buy? So we're faced with that question, quite early on in the conversation, and a good broker really should hold back and not answer that too quickly. Gone are the days where the rules were quite simple and we just said, it's 4 times what you earn or 5 times what you earn. That's what you can borrow. Now, it's not a million miles away from that, but what a lender likes to do now, and what a good broker will like to do now, is to do an assessment of what we call your affordability, as I've mentioned a couple of times. Yeah. And so it's not necessarily how much you earn. Yeah. It's more about what the difference is between what you earn and what you spend, your outgoings every month. And that's really what's used these days to assess your affordability, and that can work really well in your favor, because if you can reduce your outgoings,
if you don't spend a lot, it could be great.
Absolutely, it can work in your favor. And like I said, preparation is key. So if you can reduce your outgoings for a period of time, it really works. Absolutely, it really works in your favor. But if you're looking for a rule of thumb, before speaking to a mortgage broker, then you can look between 4 times to 5 times your earnings.
Yeah, because I guess it does kind of vary depending on all of those factors. So you said, you could end up borrowing more, you could end up borrowing less. It just depends. So if you did have a low salary, which I know is quite hard to determine, because what is a low salary? I mean, it could vary depending on who you are. Can you get a mortgage with a lower salary?
Yeah, there's absolutely no reason why not. At the end of the day, it's not so much the mortgage, it's the value of the house that you want to buy. So it really It's really based on, you know, your ambitions and your intentions and how realistic you can be. And a big factor as well can be, you know, not only where you live, but the type of house that you want to move into, the reason for buying a house. Not everybody these days buys a house to live in. Could often be an investment to rent out. So no, it's all relative at the end of the day when you're talking about people's salaries, whether they're low or high. But no, don't be too intimidated. If you're thinking I've got a low salary, I'm excluded from the market. No, not at all. You know, a good conversation with an estate agent or a mortgage broker can help put that in perspective for you. And what they'll do is not tell you that you can't do it, but they'll tell you what options are available to you.
So that's good. So it's not that it's impossible, but you just, I think having the conversation is key, and don't completely write yourself off because you think your salary is low, because it may not, you know. I think as well in the media, you always get, you know, headlines that it's impossible to buy a home and, you know, the average person earns X. And honestly, it depends where you are in the country, and things really do vary. So I wouldn't take those things as a rule of thumb.
I can think of a lady we helped a couple of weeks ago who, you know, was in a similar situation, didn't feel like they earned enough, but what they'd done is over the last, you know, 10, 15 years, saved up a really nice, healthy deposit, and it put them in a really strong position despite the fact they didn't feel they had a particularly high salary, and she managed to achieve what she wanted to achieve, which was great.
A lot of people want to know, how do you buy a property with another person? Because I don't think there's enough information on how does it work with two people? Is it just one person's salary that's taken into account? Is it two people? Blah, blah, blah. So yeah, could you break that down to us?
Yeah, of course. Yeah, you're absolutely getting into this together.
Yeah.
When you're looking to buy a house. So you've got to, like I said earlier on, you've got to have some good, frank, honest conversations with each other. You know, lay your cards on the table. Because you'll be assessed together, really, and so sharing with each other your details in terms of your income and your outgoings. You'll both own the home together. You'll both be on the mortgage together, and both be committed to paying that mortgage together. So trust is an interesting factor when people are looking to buy a house together. But it's relatively straightforward. There shouldn't be any reason to feel any more daunted about buying a house with somebody else as to doing it yourself, really. Provided you've had those frank, open, honest conversations. You can't hide anything from each other when you're buying a house. Also, there's scenarios where you can get some additional help, particularly from a solicitor, in terms of how you own the property together.
Okay.
A married couple typically would own the home together and both be jointly liable together for the property. And if they were to part ways, they would both own that property, you know, outright together. What you find these days, particularly with the younger generation, you see friends buying a house together far more often.
Yeah.
These days, which is quite cool. But obviously, they enter that transaction, they enter that relationship not always on the same terms. So one can have a bigger deposit than the other and things like that.
Yeah.
And obviously you might want to protect that. And so there's some quite simple legal work you can do to make sure that you protect, you know, your contribution to buying a house if you're going in there with somebody else. But again, it's very straightforward. It's very common these days.
You're right, because I know a lot of people who are either buying with friends or with family members. And of course, because property is so expensive these days, you know, wherever you can get that help or, you know, do it with somebody, I definitely think it's great. So the next question I actually really want to know more about, because I am self-employed now myself. So how is the process for somebody who is self-employed that wants to buy a property?
Okay, in many ways, it's exactly the same. Don't be terrified of thinking it's hugely different. I guess the only ingredient which is slightly different is how you demonstrate to a lender your income. So it's making sure that you do your tax returns on time and well ahead. If you've got an accountant, that they draw your accounts together for you and provide them to you in a format that you can share. If you're quite early on in your self-employed career, then you could look at forecasts as well, projections as to what you believe you can earn, an accountant can work with you to draft those together. But no, once you're organised and you're in a good place with there, then you're in as good a position as anybody, really. Lenders out there are well accustomed to looking after self-employed applicants now. It's a huge part of the economy. Self-employed customers. We hear about the gig economy, so it's quite a diverse sector. And lenders have adapted really well over the last 5 years or so to make sure that they can serve customers like yourself and others that are self-employed. For more technical information, definitely go to the website. There's certain documents that you need to provide, but you'll be familiar with it if you've been doing your tax returns, or your accountant can get those for you. But yeah, absolutely. Get to grips with those technical documents, and you'll be absolutely fine. So go and visit the website and get the information from there for sure.
Thank you. That's really, really helpful. Another question that I get a lot is, when is the right time to see a mortgage broker? Is it too early to have that first meeting when you're actually still saving?
No, absolutely not. That is the time to speak to a mortgage broker. Yeah. I mean, if you're anything like me, then you're better at saving when you've got a very clear goal in mind.
Yeah.
and that goal, I think, is what a mortgage broker can help you establish. Until you've spoken to a mortgage broker, you can't really determine how much you need to save. They'll talk to you about the type of property that you want to buy, what the value of that property is likely to be. They'll look at your income. And then basically they'll assess the gap between, your affordability and the house you want to buy. And that gap is simply, becomes now your savings goal.
Yes.
The earlier you have the conversation, the more focused you can be on what that goal is. I think the better your savings going to be. It's certainly what you need to tempt you away from a takeaway at the weekend, or, an extra pint or gin and tonic in the pub. Is that savings goal. So no, make it real. Speak to somebody. Get that goal, focus on it as early in the process as you can be. It could be really good news. You could be further along your savings journey than you thought you were.
I mean, I had that situation, actually. I didn't think I was anywhere near how much I needed. And my dad was saying, you are, trust me. Set you up with a mortgage broker, went in and he said, yeah, I mean, you can save a little bit more if you want to, but it's not really going to make much difference in what you can buy. So I would recommend just looking. So you're right, you might get good news and you're thinking that you're far off, but you're actually really close. So with saving then, of course, everybody knows about the lifetime ISA. Please share what the Nottingham offers and what the lifetime ISA is and how people can use that for their mortgages.
So the Nottingham offer the lifetime ISA both in their branch, but also online. Okay. So you can access it in whichever way is best for you. And it's an absolutely fantastic savings account for customers that aged between 18 and 39 who are saving for a deposit for their first home. What it enables you to do is to save up to £4,000 a year into a lifetime ISA, and the government will give you a 25% bonus, let's call it a bonus, on top of that each year.
Yeah.
So it can really help boost your savings and accelerate your savings for that house deposit. We talked a moment ago about being focused on goals, and that's another reason why a lifetime ISA is really good, because it's clearly for the purpose of buying your first house, if that's your reason for opening it. So there's certain restrictions, like you must hold the account for 12 months.
Okay.
You can't make withdrawals from it unless it's for buying a house, and if you do this,
I think that's great.
Absolutely, there's penalties there to act as a deterrent. So, it's really good at giving you not just that boost and accelerating your savings, but also giving you that focus for the purpose of what you're saving for.
Okay, amazing. And let's say I was a potential first-time buyer and I had a lifetime ISA. Are they viewed negatively by lenders, and is the process when it comes to seeing a mortgage broker the same? No,
the lifetime ISA is really smartened up since previous iterations of it. You might have heard of a help to buy ISA.
Yeah.
That got a little bit of a bad rap because you didn't get access to the funds until after you'd bought the house.
Yeah.
which would cause some confusion with customers. No, the lifetime ISA resolves all of that. So, you know what you've got in your lifetime ISA. You'll know the balance and the bonuses that you're getting. And what your conveyancer will do is they will work with you before you complete on the purchase to access the funds from your LISA provider. And they'll do that for you. It's really straightforward. They'll contact your LISA provider, ask for the funds to be received on the day that you want to complete. And it's all done electronically. So it's all quite seamless. So no, it doesn't put anybody off. Doesn't restrict the lenders that you can use. So it's absolutely fine.
Fine, it's all good. You're not viewed as someone that can't afford a mortgage or anything. There's no negative anything around.
No, not at all. In fact, if you speak to my team of mortgage brokers, they'll see it as a really positive thing, because they're speaking to a customer that's clearly planned and prepared, and
you know what they're
absolutely. They tend quite savvy. They know what's out there for them. So no, it's all good from our perspective, and we don't have any issues helping customers find a mortgage if they're using a lifetime ISA.
So my last question that I think loads of people are going to want to hear about, because it involves numbers and percentages.
Okay.
So somebody has asked, what is a good amount of deposit to have to buy a property in London that is 350k with a partner as a couple?
A great question, straight in there with the numbers. It's a bit like how much.
Yeah.
How much can I borrow type question. I'd say straight off, you will want at least 5%. So that's £17,500 in my calculations. Anyway, you want to make sure you've got at least that.
At least.
Okay. With that, you've then got two options. One is you can go straight out into the market and look at and speak to a mortgage broker about what we call 95% loan to value mortgages. Now that's as high as you can go in the market right now.
Yeah.
Or your other alternative is to look at the Help to Buy scheme. And that's where the government will give you up to 20% in addition to that 5% that you've got, and help you put that down as a deposit as well. So that will boost your deposit to £87,500 if you've got that 5%. And that really opens up the market for you. That will give you access to that 75% loan to value, we say, market. A much more competitive deal. Whether you're on your own or whether you're going into the mortgage with somebody else, you can pool your funds together to raise that amount. Now, beyond that 5% deposit, if you can, then great. The more you put down as a deposit, potentially the better the mortgage deal you can access in the market. Yeah. And there's a bit of a sweet spot, so your mortgage broker will sort of work with you, because you don't want to put down too much if it's not going to give you any benefits sometimes.
Exactly. Yeah.
You want to keep some of your savings back. You've got other fees. You got your conveyancing fees. You're moving into a new house. You want to invest in your property from the start. Yeah. So it's not best to put all your funds in if it's not going to give you access to a better deal.
Yeah.
So at least 5%, you've got options. Beyond that, your mortgage broker will work with you to determine, how much is best to put down to give you the best deal out there on the market for you.
I think loads of people will be happy with that breakdown, because they can then apply that to their own budget, whether it's 400k or 200k, etc. So thank you so much for that. That was the last question, everyone. And Ben, thank you so much for answering these questions. I know that you probably get asked these questions all the time, but you know everything already. So I think a lot of people will be really, really happy to have heard you talk and actually hear it from somebody that knows what they're talking about. But of course, please do share where we can get more information on what the Nottingham offer as well.
Yeah, absolutely. So you'll be able to access Nottingham Mortgage Services as part of the Nottingham Building Society's wider proposition. So visit thenottingham.com.
Yes, you can ask all the questions there. So I'm going to leave all the details down below as well, as to where you can find out more information and how to get a hold of people and speak to people and get your property journey started. But Ben, you've been amazing.
Thank you, Jade.
Thank you so much. So if you all did enjoy this video, please do give it a thumbs up, give it a comment, and let me know where you're at in your property journey. I'll see you all really, really soon in my next video. Bye.